Welcome to the Female Fund Founder Series, brought to you by the Global Female Investors Network. I'm Amanda Pollinger, founder of the Global Female Investors Network. The purpose of this series is to emphasize the humanity of female fund owners and founders and highlight how their background and experiences have enabled them to envision an investment philosophy that brings a unique or certainly different perspective to being a successful investor. Today, I'd like to invite Nadine Buckland, CEO of Zenzic Capital, to the program. Nadine has more than 2 decades of advisory and investment experience. She co-founded Zenzic Capital in 2013 with Tom Lloyd-Jones. Prior to founding Zenzic, Nadine held insolvency and transaction advisory roles at Horwath Clark Whitehill, RSM Tenon, and Baker Tilly. Welcome, Nadine, to the program.
Hi, Amanda. Thank you very much for having me.
So let's start the conversation by talking about your formative years. Where were you born? What kind of family were you born into? And who are the people in those early years that you consider, looking back, to have been important in making you the person you are today?
These are always good questions that every time I get asked them, I think to myself, do I have much of a story to tell here? Because I don't have that sort of rags to riches route that you might find interesting. But I think firstly, born in Southeast London to two parents who provided me with a very sort of safe and stable upbringing. My father was sort of first generation in the UK, having been born to parents that had been brought over to the UK, into Wales actually, during the war as prisoners of war on Welsh farms. They were Italian. And after the war ended, they moved all of their family to the UK and created a market farming and gardening business in Wales. And I remember spending years with my grandmother in Newport Market, selling fruit and veg that they had grown and all bought and trying to sell for a profit. He moved out of Wales when he was 18, and his first job was with NatWest in a bank in a branch, and he my father ended up staying with the same bank until he died. He was 20 something years as a member of staff with them, moved his way around, ended up actually being in the lending side of the bank, which is rather coincidental given that's sort of what I tend to do now. My mother, actually randomly also born of Welsh parents, although my father Italian parents but lived in Wales, my mother Welsh parents. And they also, after the war, changed lifestyles and actually moved from Wales to London. And so my mother and father met when they were in their very early 20s in London. And it's what's interesting for me about the background of my upbringing was that, in both scenarios, I guess, I look back at my grandparents to see women, interestingly, that were very strong. My mother's mum, she grew up on a Welsh farm in Aberystwyth, taken out of school at the earliest point that they could to work on that farm. And it was hard, the environment right on the coast of Wales there is a hard landscape to farm. She was actually, she trained and they bred shy horses as well there, which was, quite, if you look at sort of the world of equestrian, that's definitely going to be sort of the most challenging in terms of the size of the horses and all the rest of it. So it was quite an interesting life when I look back to see what she did at an early age. And then, of course, moving out of Wales, where Welsh was her first language, and spoke not huge amounts of English, to then, move to London post-war and start an entirely new life for her with my grandfather in London. And then I look at my nan, who was my dad's mother, you know, straight out of Italy into a country where she didn't speak English either, and again had to start a life in a country and build a business in that area that would make the family enough money to live. So interesting when I look back, and I hadn't spent much time thinking about this until, you know, a few years ago, about the sort of background and my heritage in that way. But I think probably has formed a lot of my character now. I definitely would say I'm quite a strong and someone who very much focuses on perseverance in life, doesn't give up easily. So I think that's possibly, you know, that from them. And you know, other than that, you know, both my mother and father worked. They worked, you know, we lived in a fairly normal house in southeast London. I grew up in your sort of standard 2 up, 2 down, and they worked hard to send me to I think at the time, you know, it was a good school, wanted the best academically for me, things that they hadn't, you know, had in life. They wanted to try and give to me, and that was really my my story of my early years.
So there are hints there of entrepreneurs, of women doing roles that weren't necessarily female roles, right?
Yeah.
You know, and obviously you hear through it all, you know, taking a chance, you know, building a business, moving to somewhere where there wasn't necessarily a great deal of comfort around, you know, speaking a different language or being in a place that's unusual. And so I think, you know, one of the things that I observe for women who are you know, are owners of funds is, you know, it does take perseverance. It does take a sense of, you know, you're going to keep going even if you are different from those around you. There's something in you that kind of makes you want to get to your end goal, regardless of the fact that it's tough and tough going, and that you're different. So it's really interesting, and it's one of the reasons I asked that question, because I think it is, you know, it is part of that experience that I think does inform how you think about investing and how you live your life to a great extent. So let's move from your, you know, from kind of your early background to university, and perhaps you can share when you were first exposed to the concept of investing, if it did in fact happen in those early years.
Yes, I think when I think about this period of my life, it was probably one of the most challenging outside of running a business and growing a company. I didn't have the most straightforward journey at school. I think I didn't tick the conformist boxes right from being young, and so academically, I think everyone realised that I was able to be bright. It was just, was I really that willing to apply myself at the points where I needed to at that stage in my life? I felt quite strongly that I enjoyed back then the arts and drama and things that perhaps weren't as academic as my school would have wanted me to have been in terms of my focus, where my focus was. And so I found the period between sort of finishing school and going to university quite difficult, because I don't feel I got the support that you might have got if I was excelling in any particular academic subject at the time. And it so turned out that I did excel with my A levels. It's just that leading up to the point where I had to do it, I definitely put barriers up. And I think in part, when I look back and I've, you know, talked to people about this in my personal life, I just didn't really have anyone in my school that believed in me, because I didn't sort of stick to the you know, wanting to do brilliantly at Latin and maths and English. And, you know, I enjoyed all the subjects. So I remember looking back now, I think I actually enjoyed quite a lot of those subjects, but it's just that I didn't have that teacher that really got me. And so as a result, I just, kind of fell between the cracks a bit, I think, and didn't get the guidance on actually what would be right for my type of personality from a career perspective. Therefore, where should I go to university? And therefore, it was only when I got my A-level results that I was able to say, actually, I've got decent enough grades now to choose a university of a decent standing, and chose Durham. And in my mind, I thought, right, this is a great academic institution. At the time, if you weren't going to Oxford back in the sort of this was like 1998, if you weren't going to Oxford or Cambridge, Durham was a really, really good next choice. And honestly, I disliked it from the minute that I arrived. It just was not an environment that I was well suited to. I think, I don't know, personality wise, I look back, I didn't drink. I know it sounds ridiculous, but I just didn't fit the kind of normal mold of the type of student that would go to university at the time. It was all about, think back to 1998. It was very much the years where university was the thing that you did. You went to school, you went to university. I was first to go to uni out of my family, so I didn't have the guidance from my parents either about choosing the right environment, the right uni. They hadn't been through that process. So I remember it being quite a lonely time for me, because I went there and I didn't really make friends easily, because I wasn't great at joining in all of the drinking activities that sort of seemed to create the bonds with people that you kind of wanted or needed when you went to somewhere of a distance, at least. It's not like I could just travel home particularly easily there. And so within a year, I actually decided that university was not for me, and I dropped out. Now, whether or not, if I'd had the right guidance and I'd gone to the right environment, maybe I'd gone closer to home, maybe I would have done better with my choice, and I would have stuck with it. But it was quite controversial because my father, who was very big supporter of me and didn't want me to be unhappy, but did say on many occasions, well, we've supported you in working hard to send you to a private school. In their minds, the next step was to go to university and graduate, right? So understandably, they were a little bit concerned that I was not making the right decision at the time to not go to university. And of course, also back then, major institutions that you would want to go and work for, most of them were requiring you to get a degree. There wasn't the support there is now. I mean, now if you look, I was speaking to some friends of mine that work for major banks, and they've all scrapped some of their requirements for going to university full stop, and what degree level you get. It's all gone out of their criteria selection process. Then it was not the case. Actually, then I think more so than ever, it was you needed a 2-1 and above, etc., etc. So yeah, it was an interesting time. I think with regards to investing, though, the concept of investing happened way before. Something I didn't mention earlier when I was talking about my early years was my father, outside of work, used to run the away travel for Crystal Palace Football Club. So, and this was when football clubs didn't often at the time arrange all of the away travel. So you would have to go from, if you were going to watch an away game, you'd travel by coach or by train. So my father used to organise all these special trains to go from whichever location in London to whichever location Crystal Palace were paying in an away club. And then my parents would make all the food for the train travel, and he'd have this trolley go up and down with the trolley selling sandwiches that my parents had made. And my dad was always very keen to say, look, this is something I'm passionate about. I don't do this because I have to do it. I don't do it because it's just it's something that I love doing, because he was passionate about Crystal Palace Football Club, and he wanted to be a part of their journey at the time. But what we would do is every weekend we'd sit and we'd count the money, coins, where he'd taken the money for the sandwiches. And I remember loving sitting there with all these pound coins, 50p's, 10p's, 5p's, and we'd have to bag them up into the old-fashioned clear bags to take them to the bank to bank the money. And I think when I look back, that process taught me a lot about, profit, making profit, what you could do from buying bread in a cash and carry and crisps and, chocolate bars and selling them for a margin. And so quite early on, even, this is back from when I was 5, 6 years old, I was doing that with my parents and doing that with my father as well at the weekends. And so it was, I think, from quite an early age, that idea of, to make money, you've got to create profit. And understanding that as a concept, I think, is quite important for any young person. So that, together with then looking at, his sort of concepts of entrepreneurialism, was quite interesting, because he sort of saw that as a business, and he would talk to me often about, he'd talk about the company name that he'd given himself to be able to sort of get these trains that he would have to organise, etc. And you don't think about these things until you're asked, in questions like this, and then you realise actually all these little things that have happened in your early years, how they've formed your thinking and your mindset now. So yeah, that's
really fascinating. And one of the things that for all the women, CEOs and investors that I've spoken to, fathers play a very important role in giving us credibility, in giving us that ability to do whatever we want to do. And so it's really fascinating. And I really appreciate you talking a bit about your kind of personal background. So as you think about your professional pathway, so you've left, you haven't finished university. What was your first job, and bring us into then, how did you end up in the finance arena?
Yeah. So at the time, my father obviously worked for NatWest. My mother at the time worked for what was the kind of PricewaterhouseCoopers, and in their insolvency business. And so, and with my father working for NatWest at the time, he was in the bad bank dealing with a lot of insolvency practitioners every time, a business that NatWest had lent money to, for whatever reason, failed to repay the funds, they would repay the loan. They would obviously get involved as insolvency practitioners at that point. So I remember from quite an early age being often, back in the day where you were able to entertain, the insolvency guys would often take my father out, and I'd be at dinner tables with these partners of these accounting practices, specifically with the insolvency teams, and hearing all about sort of what they were doing, trading companies that were in receivership at the time. That was pretty normal. And so my first job was working for an insolvency practitioner, a boutique firm, that was effectively all they did was insolvency work. They weren't the wider accounting firm, and that was very interesting. My first role was working on a trading receivership on a carpet factory, and selling. I remember being the junior, and I was sent to the shop, and I was selling the carpet, because you basically had to run the business. So someone had to be involved in all aspects of it. And I think they thought, well, she's a chatterbox, so good place for her, park her in the shop and see what she does over that period. But it was it was an eye-opener, that job, for many reasons. I think, one, understanding the work hours. I mean, you've gone from school and university and suddenly this big wide world of working, and we were doing the work during the day of running the business, and then in the evening we were pulling together a lot of the reporting that was required. And I remember sitting in hotels, because you were posted wherever there was a trading receivership. So sometimes, certainly the carpet factory was definitely in the north, I think Sheffield area, from recollection. So you were away from home, and you were then you were working within a small team of people trading that business and doing the job of job during the day of actually running the company, and then in the evening doing all the work that you needed to do as administrators. So you were plunged into a world of, 9 o'clock starts or 8:30 starts, whatever, but still working at 9 o'clock at night. And I remember ringing my dad and saying to my dad, this is utterly insane. Do you realise the hours that you have to do? And my dad saying, yes, this is all part and parcel of normal working life, Nadine. You're going to have to get used to this. But so that was early on, and I started off life in insolvency. I ended up obviously moving from one firm to another within that vein, and what I realised quite early on to that process was that to become a partner, which is probably where I in my head wanted to be, I had the ambition to be even from day one, because they were going out and winning the business. They were the ones going out and speaking to the individuals, dealing with, trying to find companies that, needed the support of an insolvency firm, maybe that weren't there yet. And you were the ones trying to win that business so that if they did fall into insolvency, you would be appointed as administrator. So you were maybe working with banks, etc., building relationships in the way that my dad would entertain these insolvency guys. But obviously, you suddenly realise in your early 20s that you can't be that unless you follow a process of career development within that industry sector. And for me, that was just going to take too long. I mean, I just didn't have the patience to go through a route of becoming a partner in a big firm in that way. And so I remember, this was a point when my father was still alive, and he died when I was, 25, 26. But him saying to me, look, the reality is, Nadine, if you really want to sort of do something in life that's sort of maybe ahead of your years of experience, then you've got to do something yourself. You've got to run your own business. That's really the only way you can do it. And I actually think you would be good at that. Your personality suits it. You're not, in the same way I wasn't conformist at school, I wasn't probably that conformist in the workplace either. But I had drive and I had ambition, and so that was kind of the start of my conversations around what do I want to do. I found myself moving from insolvency into the world of advisory because I'd seen a lot of the investment firms that were buying into these businesses that were insolvent, and trading them into them profitable businesses, repositioning them as companies and moving them forward. And I could see that there was a route to capital there that was quite different at the time. It was quite heavily private equity and then banks, and actually this was the emergence post GFC of the non-bank lending market. And a lot of the states firms that were doing well as non-bank lenders in America were moving to the UK and spotting opportunity to do the same in the UK. And 10 years on to Zenzic's growth as a firm, the non-bank lending market has changed completely in that time period. It's grown immeasurably. When we set up Zenzic, it was quite still quite an emerging market. I effectively saw the opportunity when I moved from insolvency to starting to work in an environment where I was originating transactions for the funds that were emerging in the UK. I could see that there was this opportunity effectively to maybe look at a way of creating a business that tapped into that capital. And so started my thinking around what can I do that's different, but where I could add value. And so Zenzic was sort of the brainchild of me and Tom, who you mentioned at the beginning. At the time when we founded Zenzic, Tom was working at EY in their funds and transactional corporate finance practice. I had been working with some of these emerging funds coming out of the States into the UK, and they were wanting to do their fund structuring, etc. And he and I would often come across one another in the workplace and chatted around what I did, what he did, how we could maybe be complementary to one another. And that was really the birth of Zenzic. We said, actually, there's a market opportunity here working with these non-bank lenders which are emerging. We understand how their funds are structured. We understand what types of transactions they want to do. We spotted an opportunity to start working with that capital, which had very limited resource internally for origination, but they had a lot of capital to deploy. And at the time, there weren't huge amounts of corporate finance advisors that really understood that capital. Plenty that understood private equity and understood M&A, but not structured credit and structured credit advisory. And so that's effectively what sort of led to the birth of Zenzic.
So, and that's a good segue into understanding, take me through your current investment philosophy and process, and help me understand why you think everything you've experienced so far in your life gives you a unique or different perspective to being a successful investor in the specific area that you've chosen to invest in.
Sure. Well, Zenzic's business as it stands now is that we are a real estate investment manager in the credit space, and we span everything from real estate development financing, so individual asset financings, building ground up development of asset classes in different walks of real estate, so student accommodation, residential housing, self-storage, any asset class really that we could constitute as real estate led. And we go right through to what we call special situations. So that's where we're typically investing into either situations where we've got nascent real estate asset classes looking to grow to become institutionally attractive for an exit, through to stress and distress scenarios where we're repositioning assets and effectively supporting management teams in that process to a point where they can then find a suitable exit for our capital, normally through a refinancing exercise. The philosophy there was born out of the fact that as an advisory business for the first 7 years, 6-7 years of Zenzic's life, we could see that real estate as an asset class was one that it had its pockets. There's a lot of investment managers that focus on one of those things. So they might be, you might be a real estate development finance lender, and that's what you do. You might be somebody who provides investment loans to build assets. You might be somebody that concentrates on stress and distress. But what we could see within real estate was that there was an opportunity for an investment management business to span all of those facets if we had the right team to be able to deliver on all of those verticals. And Zenzic migrated from an advisory business focused on the lower mid-market, so SME businesses that were requiring capital to grow. They were the counterparties that we were advising to begin with. Effectively, what we said to ourselves was, look, actually, there's a really great opportunity here for us to turn that track record and those relationships as advisor into one where we are the capital provider. And so after building balance sheet in Zenzic, so we bootstrap the business, we don't have equity investors in the company. We've just built the equity in the business through effectively growing our capital balance sheet base. We saw the opportunity to start investing that balance sheet. And so the investment philosophy is formed from those formative years of Zenzic growing as an advisor through to where we are today as a market, which effectively is one of the, probably, in my view, best markets for our strategy that's ever been in the time that we've owned Zenzic. And I say that in the respect that obviously we're seeing huge fundamental shifts in real estate asset values, changes in how people think and feel about real estate. So if you look at sort of the traditional real estate asset classes being retail, office, we're seeing big shifts in people's mindsets, institutions' mindsets to investing in those spaces. There will always be cash going into those market areas. But whereas maybe traditionally institutions would have put more of their capital to work in those places, they're now definitely looking at more of the alternative asset classes, which is certainly where we've tended to focus. I think what's really interesting for me right now is the move away from those traditional asset classes and supporting the nascent real estate asset classes. And that goes from some of the things I've just talked about, like student accommodation, through to self-storage and logistics, and areas where you've got very strong fundamentals for growth still, and especially for the SMEs. The SMEs are still underserved by capital markets. And so we, after 10 years building relationships with counterparties that really want that type of capital and are of a size where their equity available to them is pretty limited, that's where we can really help. So I think I utilize the skill sets that I gained very early on in insolvency, right through to just my understanding of how entrepreneurs and owners work. That's a really, I think, important skill that is rare to find in the finance industry, in the respect that rather than having grown my career personally through what might be a more normal route to a career as a fund manager, i.e., the traditional work for a Goldman's or equivalent, build your career up in an institution, leave the institution to find your own, found your own business. I guess what I've done is been an entrepreneur first and foremost and built that. And that gives me a very different view sometimes in a room, in an investment committee, decisions that are taken on transactions. When I talk about investment committees, we sit, we discuss the transaction at length. We do a lot of analysis to make the decisions to invest. But some of it comes down to, the quality of the underlying borrower in our scenario, because we're lenders, and what type of owner are they? How invested are they in their own business? How well do they know their own business? And some of that is just having been around entrepreneurs and been an entrepreneur myself that helps me make those decisions. And sometimes you can't quantify some of that. That is, a lot of that is just knowledge built over, X number of years being around different types of people with different business backgrounds.
So I mean, it's so interesting because from the beginning of your story to now, I mean, you can just see that, it is your own personal story, right? And a lot of what you've been able to achieve has come from, again, building on the entrepreneurial background, the feeling, the moving outside of your comfort zone, but being willing to do that, and then the different path that you took from the norm, and how that probably resonates to some extent with those that you're working with, and then this whole notion of looking at things from a profit perspective, and your dad's kind of your dad's small business back when, and really understanding what that takes. Perhaps we finish off by, if you're willing, giving me an example of a successful investment outcome. You may not be able to go into all of the details, but take us through one successful investing scenario from the last few years.
Yeah, well, I was thinking about this just over the weekend, actually, because we were asked in an investor meeting, as often you do get asked, what are your, what are you unique, what's unique about your strategy? And actually for me, that's also ties in with your question. We looked at the residential market very early on to Zenzic in terms of what we believe to be a strong fundamental for growth as an asset class. We always look at those asset classes we believe to be free of any kind of built up underlying views on certain market areas. So, you know, in a number of institutions, as I said, you know, the commonplace investing was for real estate was into office and retail. We looked quite early on to Zenzic's growth story into what we could do within the residential space. We could see there to be demand for it, and we could see there to be strong underlying investment returns available. But we because we perhaps hadn't worked for the big institutions, we hadn't formed this opinion about whether or not it was an institutional asset class or not. We just saw the returns available to us. And so we started investing into that space quite early on into our journey of moving from an investment advisory business to becoming an investment manager. And we've now deployed a large sum of capital into residential development, both to what we call, you know, ground up development of homes in the respect of, you know, people that buy flats and houses, through to what we call build to rent in the market, which is, you know, building property where you don't sell the property at all, you just, you know, hold it for the rental incomes. And more and more, we're seeing institutions start to look at that now as more of an institutional asset class. It's more attractive now than it ever has been, especially with the changes in retail and office investment. And so that is a really good example in my mind about Zenzic, what we do, which is look for value opportunity, and also looking at particular changes in market opportunity and pivoting to where those are. For us, that residential journey is something, one, that we're very, very good at, but two, it's been something that we could see a long-term future in much earlier on to maybe some of the institutions that are moving into it now that they're having to pivot. So that is a good example, I think, of a good outcome for us, because it's proven to be very successful in returns. You know, we're sitting senior positions, often getting sort of 15 IRRs unlevered in those transactions, and you know, we can see there to be huge growth opportunities still now in it, but we've got a team established in that marketplace now with great experience, moving into a market where now more than ever investors are actually really interested in what someone can do within real estate development and residential development in particular.
Fantastic. Well, listen, it's been really enjoyable, really fun actually listening to your experience and your history, and you know, it's another case of way to go, Dad, but also Mum, and also grandparents being involved in making you who you are, but equally in you taking your own path. So huge congratulations. Thank you for sharing your experience, and I look forward to seeing you soon.
Thank you very much. I hope that it's helpful to, especially, you know, women now on their journey, moving through into the fund management space. I think it's an area that women should be excited to embark on a journey to do something themselves if they choose that path, to create a fund. I think that it's a, you know, challenging marketplace. It's especially challenging for fundraising currently, as everyone will tell you. But I think if you've got sort of the resilience and gut that you need to succeed in this market, then I think it's very much worth investing time trying to build your career within it, because nothing comes without a challenge. But I think it can be hugely rewarding. And I think now, for women more than ever, there's great opportunity to really, you know, take a leap into that world of actually being the person that is making those investment decisions. You know, I think it traditionally has been a very male-dominated environment, but I think from my perspective now, you know, working with somebody like yourself on interviews like this, raising awareness for women and giving them sort of a bit of a sounding board to share their stories, I think will help give other women confidence that actually it's worth taking those steps. So if nothing else, I hope it's helpful to somebody.
It will be helpful to many, many other women. So thank you. And thank you, everybody, for listening to another in the series of female fund owners for Global Female Investors Network.